Today, I'm going to be talking about how to find tax delinquent properties. How do you find tax delinquent properties? Is there a secret? By the end of this video, I'm going to show you how to find and acquire properties with delinquent taxes and ways that you can avoid potential pitfalls, but show you ways to build wealth utilizing this awesome strategy. What is it about tax delinquent properties that make them so appealing? However, at the same time, what is it about these properties that make potential investors nervous? Stick with me as I detail out these questions by first explaining what a tax delinquent property is. Secondly, I want to explain to you the process I go through when I find tax delinquent properties. And finally, what are some of the most important elements when it comes to acquiring these properties after you find them? If you're ready, let's go. So what is a tax delinquent property? Well, I think if we want to understand that first, we got to understand what property taxes are. Property taxes really are dues that are owed on the property. If you live in the United States, you're going to owe taxes on the income you make, on your groceries, on almost anything, and property is nothing different, right? And the governing agencies that acquire these taxes from you utilize it to build schools, libraries, roads, parks, and other things. Every year, the government sends out assessments letting you know what your property is worth in their eyes and how much property tax you owe. But overall, consider it this: property taxes is just another element when it comes to real estate investing that you as the investor or the homeowner owes on your property, right? So there's the mortgage payment, which is how much you owe on the loan you've taken from the home, but also you owe insurance and taxes that is required on every piece of property, right? And so taxes is just an added expense. And if the value of that property continues to go up, chances are your mortgage payment's going to go up each year if your property taxes are going up. So a tax delinquent property is when somebody stops paying those property taxes. Let's go through that process and understand what happens when somebody stops paying their taxes and how it becomes tax delinquent. Now, obviously, it's really important to understand if you owe taxes on a property and you stop paying those property taxes, you become tax delinquent. That property becomes a tax delinquent property. However, there is a process that the governing agency goes through. If you stop making payments on the property, the taxes that are owed on that, it's going to send out a notice to say that you're delinquent. And eventually, if you continue to not make payments, there's going to be a lien on that property. Now, how long you can go without paying property taxes really depends on the county or the state that you live in, but typically it's between 1 to 3 years before they say, listen, we need to sell this property to recoup the money that's owed on these property taxes. But eventually, if you don't pay the debt, the property taxes that are owed, the governing agency is going to have an auction to sell that property. And each state is a little bit different, right? Some states are tax lien states, some states are tax deed states. Now, if you're in a tax deed state, the governing agency is going to sell your property outright and sell the deed to your property to the highest bidder at the auction, which means they get the deed entitled to that property. If you're in a tax lien state, it means they're selling that lien to an investor, and the investor then becomes the one who is collecting the debt from you who owes the property tax now to the investor, right? And there's typically an interest rate associated with that where they're making money every single month. But eventually, if you hold a tax lien certificate as an investor and the person that owes you that lien money from the property taxes owed, if they don't pay that eventually you can foreclose and get the deed entitled to that property. So how do you find these tax delinquent properties? They're in every state, they're everywhere. Some states have more abundant tax delinquent properties than others, but there's a couple different ways that I do it. Number one, I use an off-market real estate software that's called RealFlow. I love this because you can filter within its search mechanism. You can find out which properties owe a significant amount of taxes, and you can put offers on these properties, maybe before they get to auction. Another website that I really like that is an auction site, because most of the time, many of these tax delinquent properties are sold on an auction, and one is called bidforassets.com. It's bid and then the number 4assets.com. And you can search by state and eventually by county and find properties that are tax delinquent. Another place to go is just the assessor's office. The county assessor's office, typically they're going to know when auctions are going to happen on certain properties. Now, once you find these properties through any of these different ways I just explained, what is the process? You got to understand that a majority of these tax delinquent auctions are cash only. While each auction will have its own rules, normally you need to understand that you probably need a lump sum of cash in order to acquire that property at the end of the auction if you're the winner. And you might have cash on hand, or you might have a bank that's willing to lend to you immediately when the auction closes, or a personal investor, you got to have that money ready. A second thing you've got to understand is you got to have a strategy planned out for bidding. You must understand the value of other homes in the area, even at a micro level, to understand this home might be a little bit run down, and the home might actually change from when you win the auction to when you acquire the piece of property. So you have to have some of those costs of rehabilitation baked into the overall purchase of that home, because there's going to be some additional costs that will come out of your pocket potentially to close, or government agencies, or real estate lawyers, or rehabilitation on the property. But probably one of the most important things once you find this property and you've done the due diligence is to follow through on your commitment. If you're the highest bidder, it is time to pony up, whether it's with cash or a cashier's check, to be able to acquire that property. Typically, you might have to put some money up front and you might have a few days to close the balance out on that piece of property, but you just got to understand that when the auction closes, there's typically been some money required. And then a few days after that, depending on the government agency or taxing authority, you might have 1 day or 2 days to be able to satisfy the rest of that balance. Either way, you're going to want to go to that auction financially prepared. And finally, once you complete that transaction, you are now the owner of that home. Now understand, this is one strategy within a lot of different strategies when it comes to real estate. And I love this strategy of finding tax delinquent properties. But another one that I'll just mention to you is cash flow flipping. It's a strategy I've come up with over the last 12 months that works in any market, any economy, whether it's going up or down. And it's a great way to cash flow every single month, as well as building wealth. And it's called cash flow flipping. If you want to understand this strategy, I've created a video right here that you can watch that goes through it in detail. Thanks for stopping by. Have an amazing day.